Furniture sector's fortunes are in large measure tied to the interest rate cycle. Now, by most economists' accounts, the Reserve Bank is unlikely to touch rates this year. So, what does that portend for the sector? Well, Viv, let me begin with you. Furniture retailers always in previous cycles have tended to benefit more in the latter part of the cycle in interest rates than the earlier part. So are we beginning to see the benefits coming to this place? And are you hurt the sector as a whole?
Certainly compared to the food retailers, we do think that if there is value in the retail sector, it's in the furniture as opposed to the ShopRites and the Spars of the world, which have run quite strongly recently, or for that instance, even the Mr. Prices, etc., the clothing retailers. There's probably a bit more upside here than there is over there. We do think, yes, the lower interest rate environment is going to continue for quite some time, and that is going to be positive for the larger durable goods, like we're talking about the furniture and maybe white goods sector.
Right. Paul, you agree?
Absolutely. You know, in the old days, only rich people had furniture. Everybody else used to sit on a paint tin or a milk carton.
What are old days, Paul?
I'm talking about the 18th century, you know. Now what we have globally is furniture has become democratized. So even the poor people can afford furniture. And it's, of course, being supplied by firms that also provide credit. That's an important part of the business. And it is, of course, cyclical. But I think the whole concept of nuclear families living in well-furnished homes is now the default across the world. So a major new opportunity has been opened for those players that pitch affordable furniture, which is well-maintained, well-manufactured, doesn't fall apart, and which has got a kind of a design element. I think the Swedes, IKEA, led this trend, but I think everybody's really picking up on it.
Yeah.
So I think it's a good part of the global economy in which to be involved, and I think South Africa has a number of good furniture retailers that try their best to provide a good product.
Particularly in South Africa, where we've got new money coming up. So we've got this new middle black class that's coming up, and they are beginning to furnish homes that they didn't have before. So they're buying these new homes, and they also, of course, need to look good in those homes.
Exactly. So, you know, some of the stuff is manufactured in places like China. Some of it is assembled locally. It's one of those things where it's important to control your supply chain because a lot of it has to do with, you know, wood products and that kind of thing. But I think the stores are good. They're well positioned. Some of them provide credit. Some of them depend on other players in the financial sector like banks and others to provide the credit.
Yeah.
But certainly a good growing category in an emerging market, and certainly a good opportunity in the African continent where a lot of homes are still relatively poorly furnished, if I can say so.
Indeed, that is the case. But now, the bigger question, I suppose, is now, where are we in terms of that cycle? Because we've had now low interest rates, record low interest rates, I might add, for the last couple of years or so. So the bigger question then becomes, if you have a sense of where we are in terms of this cycle, then perhaps I suppose you can position yourself. Where do you think we are?
Look, I think the current consensus puts the earliest that we're going to have a rate hike at the end of this year, and more likely to the first half of next year. And this has been, and the trend has been recently is they've always pushed it back a bit. I mean, we're always seeing, you know, people saying end of 2012, I might say another thing, it's going to start of 2013, etc.
Yeah.
And so inflation hasn't been a problem recently. I mean, we have bounced against that level.
So we have more time.
We have a bit more time than we might think. I think that inflation, even though people are concerned about it, has not been a problem as yet in the global economy. And the kind of, you know, withdrawal we're seeing, for instance, in commodity prices has taken some of the pressure off. Even oil prices are coming down. That fear about Iran is reduced, etc.
Okay, so let's get into the stocks and let's see the investment cases. Let's begin with Steinhoff, which is a global investment company with interest in household goods and related industries. It has grown rapidly in recent years to a market cap of 49.4 billion rand. It's on a PE of 9. Its South African assets now include JD Group and CAP International. It has major interest in furniture, manufacturing and retail in Europe, especially in Conforama. That's a brand that's in France, Spain, as well as Italy. Let me begin with you, Paul. Now, Steinhoff, historically, people have complained about the management that keeps changing and chopping stuff, and you never get any sense of trend in terms of that business. Are we there yet? It's
a fascinating story. It's one of South Africa's most picturesque corporate developments in recent years, because Marcus Jooste, the CEO, really basically put this thing together with Klaus Dahn, who's a German who for some reason or another liked being in South Africa, and Klaus Dahn's neighbor in a small town in Germany called Bruno Steinhoff. So these three gentlemen between them have built a 50 billion rand company, largely by just grabbing whatever was in front of them.
Right.
They get criticized, and I myself have been quite disparaging on this show before, saying that it's not really a furniture company, it's Marcus Jooste's corporate finance project, because they basically just load up the debt and go and snatch anything that looks interesting in front of them, whether it's in the transport business, whether it's in the forestry area, whether it's in PG Bison and so on and so forth.
Right.
But it is a substantial group now. Conforama is a big, big business. They bought it from a French corporation which wanted to get into luxury goods, so they were kind of moving out. So it's got a lot on its plate. The South African assets, as you alluded in your introduction, have been reorganized. The only problem with these guys is that they never sit still for long enough, and they've got a lot of debt, and they've got very tricky financials, and you know what? They don't care, because they control the entity and they just roll it.
We come back to my question. Are we there yet, do you think? Or are we likely to see more?
Look, for all I know, these guys are, look, they bought Conforama on a lick and a promise. They funded it in a very tricky fashion. They're talking about listing the European business separately, which would then de-gear it because they'll do a capital raising at the time. That's what they always do. They find things that are available. They go and find expensive money, then they reorganize it. The problem, of course, is in an economic downturn, they got absolutely crushed. In 2009, the share price went from 30 Rand to 9 Rand. Now it's back at 30. So that's the kind of group you're dealing with.
I'm hearing unhappiness. Viv?
Look, I do think, yes, as Paul mentioned, they are a bit chaotic for an analyst to look at them and say, okay, this is what exactly is happening. But what you have to do in a company like this is have a bit of faith in the management. And so far, what they've managed to do is quite impressive. I mean, they are good managers. Whatever they've tried to do and whatever acquisitions they've brought in generally has worked out quite good for the company. Even the Conforama deal, I mean...
Do you mean in terms of earnings growth or share price appreciation? What are you measuring?
I think they've gotten value. They've managed to bring things in and they've gotten value out of it. Even the Conforama deal, when I first saw it, I thought it was quite strange. You know, you're getting into durable goods in Europe at a time in which you're probably going to see a lot of downturn in terms of spending in Europe, etc. But they managed to beat the market expectations on that. They've done rather well. I think their only major competitor in the area is IKEA, and IKEA is like the biggest player in the world basically. So we're looking at a situation in which they have gotten into a market and done well even in the downturn. If there is an uptick in the market, we probably expect them to do rather well. At the same time, with the kind of split off we're going to see later on, maybe we might see a greater realization of value in the company. And right now, compared to earnings, the company is valued rather cheaply, possibly, as Paul mentioned, due to the fact that we can't quite be certain exactly what the true value of the company is. If they're able to organize it a little better, maybe split the different areas of the company as they are thinking of doing with the cap and the JD Group, etc., holding unit transfer cap, etc., we might get a better understanding of what the company is doing. Analysts might be more favorable towards it, and we could see that PE ratio move more towards maybe an 11 or a 12 as opposed to where it is right now.
So what do you say? Is this hot or not?
I think it is hot. It is hot.
It's hot. That's to start with. Paul, you were very strong in your criticism. Where do you stand?
No, I do like it, and I like Marcus a lot. And I think the Conforama business is interesting because there is an economic recovery going on in Europe, although many people battle to see it.
I am one of them.
They're opening new stores in places like Barcelona and so on and so forth. They're basically buying back franchise owners. So in the business, they had quite a lot of franchise-related stores, and they're buying all of those back. There's one old French guy who's 92 who's holding out and is apparently the one that is the biggest opportunity for them. They've owned a lot of properties because in France it's not like here where you can go and walk into a new mall and knock down a few walls. In France, all the buildings are national heritage sites. So if you've got the retailer, you've also got the head lease and so on and so forth. So there's a great deal of value in the property assets that Conforama owns.
So this is hot for you.
At below $30, I say it is hot, although heaven help us if there's another major recession before they've reorganized the balance sheet.
Absolutely, heaven help us, because we're going to have to try and keep watching those bond auctions from Spain, Italy, as well as France, because that's where Conforama operates, and that's now one of the biggest pieces of that group.